Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep sending us your comments and questions. We'll have them addressed towards the latter part of the show. But before we kickstart, let's see what the global handover looks like. Positive session on Wall Street. The S&P 500 snapped a 5-day losing streak, its longest since October, while the Nasdaq gains over 1% ahead of the release of Purchases Price Index data for the month of November. Stocks in the Asia Pacific opened largely higher, while the SGX Nifty is signaling a positive start for the Indian market. European markets also ended marginally lower yesterday as investors' nervousness continued over the state of global economy and inflation. On the show today, we take a closer look at the technicals of Paytm, Shalby and Sun Pharma. We also discuss how debt fund investors should play the RBI rate hike. Okay, let's get going and talk about what's trending, and that is the RBI rate hike this week, which could impact investors across the board and across different asset classes. Joining me in conversation is my first guest, Ashish Shah from Wealth First. Hi, Ashish. Thank you so much for chatting with us this morning. Talk to us about how the rate hike regime stands to impact mutual fund investors, especially those who have exposure to debt funds.
Good morning to all and the viewers. See, this RBI rate hike is expected in line. There is no surprises. And I think that is a good thing Mr. Das is doing since last couple of quarters. And for mutual fund investors, a specific question, I believe if you are short-term investor less than 3 years, then the short-term funds will give you a much better return than the bank fixed deposit or something like that. But if you are, I think, 3 year and above investor into mutual debt market, it's a Goldilocks type of a scenario because your target maturity funds, which are giving you around 7, expected to give you around 7 plus because of the higher inflation, 5% around indexation, as well as a long-term gain tax benefit. So we advise clients for a short-term funds, and if you go for 3 years and above horizon, if you have that allocation, then go for target maturity funds around 4 to 7 years of horizons. Depends on your requirement and cash flow requirement.
Okay, but if we look at the prospects for a short-term fund vis-a-vis long-duration fund, which one is preferred right now? I think going by what you said, short-term looks more attractive, but can you also tell us why that is?
See, I think there is going to be a lot of demand-supply also matters rates in the market. You can see a lot of fixed deposits of AAA highest rated companies are borrowing around 7.80% annualized. I think that is something, as my experience speaks, we are heading for a little bit of higher interest rates in coming 2 quarters. That's why we get the benefit to be in a short-term funds to get, if your horizon less than 3 years. Because I think we should get around 8 plus short-term rates in the market in a AAA and above, at least for 6 to 9 months to 12 months. That is my view. That's why I suggest short-term funds for a short-term horizon. Okay. Now, if you want to play the long, which you asked me, you want to, the interest rates are picked out, so I play interest rate curve, or I will play a long horizon. I think this is not the time. We should wait for February, particularly this budget, then February, and Fed 2 meetings. Then I will advise the client to go for a 15-year bond fund or a 15-year of government security to play the yield curve. Today, short term is I think is a best sweet spot, and 3 years above. A 4 year or 5 year of target maturity fund is the best place.
Okay, all right. But what about the expectation of the peaking of a rate hike cycle? How far away are we from that point? And as and when we get more visibility, would it be good to enter into long duration funds, including gilt funds, perhaps?
I say gilt fund, I think I like gilt fund. The problem in gilt fund, one is the art of exiting. Because suppose you enter after 50 basis point rate hike, suppose happen at terminal rate, it happens 675 or 650. You buy a 15 to 20 years of the gilt or gilt fund, which is high duration. But you know, after 1 or 2 years, you will get a rate down. then you get a premium, you get extraordinary return. But to get out of the gilt fund is an art. It is not science. And that is a place where most of the investors stay there and they lose money. I think this is my experience which I am sharing with you. And third thing, in a HNI investor, the taxation is a big issue. Less than 3 years, you remove your money from a debt fund, it adds to your marginal tax rate. That's why post-tax return, if you want to consider, then gilt fund, I think this is the trade-off you have to take off between taxation, post-tax returns, and the net gross rate.
Okay. All right, Ashish. Thank you so much for joining in and sharing your views with us as far as the debt investors and their strategy is concerned, especially amid the rate hike cycle that we're in. Thank you so much once again. Okay, let's shift gears and talk about what's happening in the markets and how the market is likely to play out today. Raja Venkatraman of NeoTrader joins us for talking technicals. Morning, Raja. Talk to us about the trade setup. We have mixed cues coming in. Europe was weak. Wall Street was quite encouraging. How are we poised today and what's ahead of us?
Yeah, good morning, Karunya. So the entire market was waiting for some kind of action to take. We have seen yesterday is the rate hike. Yes, by the event, there has been a very good response shown by Bank Nifty, and that has been quite an encouraging sign. Yes, there has been some bit of hesitation on the indices, but then Bank Nifty seems to have resolved those indices. And as we all know that there is always active participation in Bank Nifty, and the strong surge seen yesterday has once again rekindled the bullish bias. Yes, there was some bit of hesitation, but then that has rekindled the bullish bias. And I feel that Bank Nifty is going to take the game on from here. And well, when you take a look at both the indices, Nifty and Bank Nifty, the important zone which is emerging, the maximum pain point which is emerging as per the OI data is around 43,500 as far as the Bank Nifty is concerned and around 18,600 as far as the Nifty is concerned. Now, what the Nifty will have to do is it has to hold above 18,300. So till then, everything is fine. And I feel that Bank Nifty has got more potential to cross above 44,000 this time around. And the overall indices seems to be bullish. So the market continues to remain a dip buy. So if you're looking at dip buy levels in Nifty, it will be around 18,300 to 18,400. And in Bank Nifty, it would be around 43,000. Till these levels are maintained, one should continue to maintain a bullish poise and look for a northern trajectory.
Okay, well, that's an interesting perspective that you've shared with us, and thank you for that. But let's understand how some of these individual stocks are likely to react today to important news flow coming in. The first name I want to flag off is Paytm. Of course, this is one stock that has been in the news for various reasons, mostly negative. And now what we're given to understand is the board will be meeting on December 13th, which is next week, to mull a share buyback. Ahead of that big announcement, the big likely announcement, of course, how are we looking at Paytm's chart playing out?
See, the case with Paytm is that there are too many interested parties, but the price is not showing any signs of revival from here. So now, it's like the price versus the expectation, which is what we are seeing right now. And as far as the expectations are concerned, I still feel that Paytm has a long way to go. And if you are looking to participate in Paytm, then it's still not the appropriate moment. I would still wait for it to cross about 600 to revise my opinion. Till then, it's continuing to be on a selling pressure.
Okay, well, I'm sure our viewers are taking note of that because there's a lot of interest as far as Paytm is concerned. Moving on to another heavyweight stock this time around. This was Sun Pharma, which was pretty much in the news yesterday as well. Now, what the management is saying that they do not see any revision in their FY23 revenue guidance because of the import alert that came in for Halol facility. And they also see no impact on specialty business revenues either. The US supplies, if you look at it, from Halol plant contributed approximately 3% to FY22 revenue. So for FY23, the management says there will be no revision in guidance as far as their top line is concerned. Now, talk to us about Sun Pharma. Will it continue to witness pain before meaningfully recovering, or do you see some bounce back from these levels?
So when you take a look at Sun Pharma, right, the entire the sector itself, the pharma sector continues to be heavily news driven. So what the entire news flow which has emerged, they have already been factored in, and what I see in Sun Pharma is a big time exit from a lot of interesting holders. It had a fair share of run. It has spent its time in consolidation in hope for some. So the news flow is already factored in, and what we are seeing is an exit. So one should not be looking at Sun Pharma from a long position. In fact, you can look to trade it on a short position. So it's a good play for traders, but not for investors.
Okay, noted. All right. The third name on our list today is Shalby. Promoter Dr. Vikram Shah has bought additional 30,000 shares in the company, close to 0.03% stake, and now his shareholding has increased to 7.27% in the company. Now, typically, promoters buying shares of a company bodes well for investor sentiment. How is Shalby looking on the chart, and will we see some positive action there?
See, this stock too has spent some time in. So basically, this stock is showing some signs of exhaustion right now. And yes, the news flow seems to be encouraging. So I would continue to maintain a hold on this position if you're already having an holding. And if you look to participate, then the participation level would be above 160. Now, the overall momentum seems to be encouraging. So it could be tracked for a short-term basis.
Okay. All right. Let's address some of our viewers' comments as well. Since we were talking about Paytm, I want you to also address Nika, because again, these new age tech companies, especially consumer tech companies, see a lot of interest. And given that a lot of people have lost money from the IPO levels, they are very legitimately concerned about what's happening there. So let's talk about Nika and how it's likely to shape up.
Yeah, see, these are some names which we have discussed often, and the view continues to remain the same because it's continuing to be an exit stock because there is no sign of recovery even on a higher time frame. So what does it essentially say? It essentially means that there is clearly no sign of recovery out here, and every time there is a fair bit of rally, like we saw even in Paytm, there was a sell-off emerging. So a lot of people who are getting stuck at higher levels are actually exiting this stock. So I would not advise a buy-in on to the viewers in any of these names, be it Nika, be it Paytm, be it Delivery, these names especially.
So a complete avoid as far as the recently listed IPO, especially tech-driven companies are concerned. Okay. Rohit is sending us a comment on our feed. He wants your advice on Coromandel International. How is this one looking?
So Coromandel of late has been picking up pretty well, and the last few days have been pretty encouraging. Yes, there was a sharp decline since August, and what we have seen is that it's come into a good demand zone around 900 levels, and it looks to be a good sign. So if you're already having a position, then 900 would be your stop loss. Otherwise, if you're looking to play this counter for a short-term play, it looks good for a target towards 1100.
Okay. Rahul is asking us for your view on KEC International. Go for it.
Yeah. KEC International has shown a very sharp up move yesterday. So the move has been surprising, but at the same time encouraging. So what it has done is it has moved above its July high. So and that too with volume. So it's a clear sign that yes, there has been some buying at lower levels. So which was around 410 to 420. There was a fair amount of consolidation out there. So now if you're looking to buy, my advice would be to buy it in two parcels. It's definitely a buy, but then it should be bought on two parcels. So one would be a buy at current levels. A dip towards 450 would be a good zone to add up. And then the stop loss should be below 400. And the upside is around the 600.
Okay, got it. Trilok is asking us for your view on SBI and ICICI Bank. How are they both looking and is there either of them that you prefer right now?
Yeah, I would still go ahead with the PSU banking space, and amongst the PSU banking space, SBI has not yet shown its true colors. And like I mentioned at the start of the show, that Bank Nifty is showing some very, very encouraging signs. And now, if SBI were to chip in, then you will definitely some more traction here. So I would go in with SBI.
Okay, all right. How's Bharti Airtel looking right now on the chart? We have a query there as well from Ashok. Now, last 1 month, it has been rather range bound. Given that it's cooled off a tad from its 52-week high, does 830 rupees level provide a good entry point, or should one wait for some more cool off happen from these levels?
Yes, like you rightly said, Bharti Airtel has shown some tendency to cool off right now. And what I would be tracking is a zone around 820, where it is at a very good support level. So if that demand zone acts up, only then I would be a buyer. Otherwise, if it were to give in, then I would actually trade it on the short side as a trader, as an intraday trade or as a multi-day trade. It's emerging as a good shorting candidate.
Oh, okay. All right. What about Kalyan Jewelers? We actually rarely ever get queries on this one. So let's address Kalyan Jewelers. Prahlad is sending us a comment here. The stock has almost doubled if we look at the last 6 months trajectory. Of course, in the last 1-2 months, it has been rather range bound. But at 107, 108 rupees levels, should one book part profit, or do you think it has more legs to the rally?
Right now, Kalyan Jewelers, the movement which we have seen is entire year. It has gone more than double.
Yeah.
But now probably there is some profit booking happening here, considering the its commodity counterpart. So what we should see is we should look to buy it at lower levels, because at this point in time, you will encounter some risk, and any reaction in the prices would only would not deter or would not dent the trend. It will actually be a good area to buy into. So that zone would be around 90.
Okay. Rakesh is sending us a comment on a query rather on JSW Energy. Now, this one also had, retreated a tad from its 52-week high. Is it a good time to buy at 300 rupees level, or do you think one should wait for further dip?
Yeah, so the stock really managed to go only up till its 2021 November 2021 highs, and after that the stock has once again started descending. So overall momentum seems to be weakening right now. So it should not be a good time to enter into JSW Energy.
Okay. Is Cochin Shipyard good for buying at current levels? Saurabh is asking this question. What do you think, Raja?
Cochin Shipyard, yes, it had a very good move, but now what I am finding is that its momentum has got stretched. So it would not be advisable to buy Cochin Shipyard right now. But overall, Cochin Shipyard is definitely a buy, and that buy zone would emerge somewhere around 510 to 530 would be a good zone, because that's where I find a good set of supports emerging. You could track the levels and take a decision then.
Okay. Gaurav is sending us a comment and wants to know your view on GMR Infra. How's this one looking?
So the real estate space has once again started buzzing, and GMR Infra has caught interest, especially in the last month. And if you see, the movement has been quite significant, considering it's a 2-digit stock. Moving from almost 35 to 43 is a significant jump. That's the move. What it has done is it has overcome quite a bit of supply zones, which was around 40 levels. Around 40 levels, there was quite a bit of supply zone there. It has overcome that. So now if you are going to buy, your stop loss will be below 40. So depending on the capital outlay, you can either buy it at current levels, or you could buy on dips towards 40. And a stop loss should be below 40, because the upside looks to be quite encouraging, and the immediate target is around 48.
Okay. Let me quickly address just one more query before we go to your picks. How is Dixon looking on the chart? Kuldeep is sending us a message to ask your view on the same.
So the IT stocks had its fair share of run, and yes, the movement was encouraging. But then, like I have been maintaining in all the shows that IT continues to remain under pressure. And yes, the pressure has once again emerged after the rally. So now what has happened in Dixon is it has become a sell on rise candidate. Its momentum is showing some weakness to the downside. So I would not encourage you to participate in Dixon right now. Wait for it to cross 4800 if you really wish to go long, or look once again the dips towards 4000 or 3800 to again enter into the stock. Otherwise, I would not be a buyer in Dixon.
Okay, all right. How about your own preferred picks in the market right now? Which stocks are you placing the bets on?
Yeah, considering some positive news flow emerging from even the Gujarat election, so the everything seems to be fine as far as the government is concerned. So there is some positive vibes emerging, and markets are also respecting that. So that's the reason why I'm chosen two positive stocks. So one will be a buy in Bharat Forge at 879, keeping a stop loss at 865 for a target of 899 and 908. And the other will be from the private sector banks, which have not yet started showing their true colors, and they have started, in fact, showing some display. So I'll be going ahead with Axis Bank at 940 with a stop loss at 925 for a target of 960 and 970.
Okay, so two buy calls coming in, one on Bharat Forge and the other on Axis Bank. Thank you so much, Raja, once again for joining in and sharing your views and observations on the markets and a host of stocks with us. On that note, we'll wrap it up right here on Morning Trade. Thank you for tuning in.